Hi, welcome to the Market Alert for Monday, the 16th of December 2024. So, economy in the UK in shock decline during October. Just have a look at the numbers. These were released on Friday at 7 a.m. You can see there minus 0.1. Forecast was for a 0.1 increase. Previous was minus 0.1 as well. So, it's not looking too bright for Starmer and his mob. As you can see there, I have to stretch that out a bit to actually see what we've got, but you can see there the last 2 months decline for the UK economy. In the US, tech bid on Avgo earnings while bonds slide ahead of key risk week. The key risk is US interest rates, which are due to be reduced this week or cut, and stagflation fears spark rate cut rout, which is sort of an indecision there. Hawks, hammer doves, and extreme downside risk hedges are surging. That's interesting, isn't it? Downside risk hedges are surging, so could be starting to see some sort of a pullback there. Let's have a look at what we've got out this week. Today we've got the flash. It's always a pain in the proverbial, as anybody who's followed the Market Alert will know. Can create a whipsaw action, so we've got that to look forward to today. And then Tuesday, we got some employment and retail sales news. And then Wednesday is the one. This is the one the market's waiting for. Is this one here? Cutting rates from 4.75 to 4.75 down to 4.50. The interesting thing here is they're going to cut rates despite the news headlines that we just like to be stagflation and downside risk and all the rest of it. They will cut rates on Wednesday evening, and then we go in towards the holidays by Friday, and then next week of course is Christmas week. Right, let's move on, have a look at the markets and kick off with the Dow. So the decline in the Dow continues, still getting red bars. We're down towards the 50% retracement. We spoke about this on Friday, 62% there with that 50 EMA. That's where the market should find a bit of support if it's going to do so, and if not, if it breaks this, then we head down towards 78 and 89. So we're through the 50 there now for the retracement, making lower highs and prices below the 5-bar moving average there as well. Again on Friday, derivatives up and cash down. So are people actually starting to take money off the table? Got the DP level there as well, where the market's finding a bit of support overnight, and then we've got the close. Flash news today, so it'll be interesting to see how the market reacts to the European numbers before the US one is released at 3 p.m. Nothing stopping the German DAX though, new all-time high for Friday. Market there 20,527, 21,000 is the next number on the cards. This market's put on a huge number this last year, as is most of the stock markets, constantly making new all-time highs. So keep an eye on this one. Market's only put in a couple of red bars there as well. Having broken the high to the left here, it's interesting to see that we've got an increase in volume as well at these levels. So maybe there is a bit of distribution going on. See what happens during today if we start to actually move lower. But unusually, we actually breached an 89% retracement from there, where we'd probably come back to there and then started to move lower. So we've come in, made a new all-time high. Let's see what happens today. There's your new all-time high, and there's your 89% retracement. In fact, I'll draw that in for you in real time. This is how you can determine whether the market's starting to lose momentum. If you look at this as a daily chart and not a 30-minute, market puts in a high, comes back, and then goes up, but fails to close above 89, and then starts to move lower, which you can see there. On this occasion, stopping it at the 200 MA there, and the S1, and the previous day's low. Price is rallying up overnight, but it's lost steam, so it's the 200 MA there, and also the low now that will hold this market, or will it hold the market, is the question. So again, if you look at, if we just go from this low here, where the market stopped, you'll see there we've got a 78% retracement. If I remove that, and we have a look from this high down to here, you'll see we're at the golden ratio of 62. The market stops there, and then even inside of here is an 89% retracement, stopped by volume, and the 200 MA and the S1 before the market moves off. Where does it come back to? We can see there it's 89%. Where's the market coming back to now? Well, again, we can do exactly the same. We can go from there to there, and you'll see we're at 78 at the moment. Where's the 89 at the 200 MA? So very powerful tool when it's combined. As with all these indicators, they have to be combined with one another to create a number of confirmation points. Let's have a look at the S&P 500. So in the S&P, here's what I was talking about earlier. Let me just spread this out though, just to make it a bit easier for you to actually see, and just drag the chart over so we can get a bit more on the height as well. So from here down to here, you'll see the market came back to 89, starting to move lower. However, if I go from here back up to here, where does the market stop? Right on 89 during Friday as well. So the market's getting into a bit of a sideways move there, but still showing weakness. 2 days of red in the S&P. We had 2 days before it reversed, but we need to take out the 20 bar moving average in order for the market to continue lower there. 30-minute chart, derivatives up, cash market down, as you can see there. Market then retracing and currently sideways at the DP. Showing a bit of support. This is the strongest stock market amongst those that we look at the moment. In the FT 100, very quiet, stuck in a sideways range. Again, you'll have 89% retracement, and you've got 100% retracement down to that line, and the 200 MA market trying to move back, but struggling at the moment. And then eventually what happens is these retracements tighten and tighten in the daily chart, and then they will break out eventually, but then you can go down to the smaller time frames to see exactly what's going on. So again, on Friday, market up, comes back, retraces 78, 89, down we go, and if you go from there to there, you get 78, 89, and as the market moves its way back, and the great thing about the software is it puts in these lines to show you where the last peak was. So if we go from there to there, you will see 89, 78, and as the market's coming back, I can see that we've got more or less 100% there. But if I go back one to where the green line is and do this, I can see we're at 78, 89, and the market finding a bit of support there, and it's oversold, and also not so much an increase in volume because it is just after 6 a.m. at the moment. But again, you can see how you tie all of these things together and how you can actually read where the markets currently are and where they're likely to go. So have a look at the US dollar. So in the US dollar, interesting picture here because market retracing as well. You can see Friday, this is very interesting. The market had a slight decline in the dollar. It's down on the overnight. So the question is it lending support to the metals market? Let's have a look. So in silver, this is approaching the 200 MA, but if we look to the left, we can see we've got this green line. So if I go from the green line there up to the high, which is this one, you'll see the market stopped bang on 89%. Now if it breaks this, we have got this level here, and we've also got this low to draw in another 78, 89% retracement as well. So from there to there, you'll see just below the 200 MA. So shake it out, just like we did here, go below the 200 MA, and then you get your green bar showing the buying coming in, and then the market reversing. If you go from there to there, you'll see market stopping 78, 89, and even inside of here we've actually got 100% retracement there before they slam the price. So even if it goes through the 89 and the 78% retracements, just have a look at the 100%, have a look at the volume, is it overbought, etc. Again, you can see the top of the market before we had that decline, got there to go, that's 89, 90%, and then up, and then again you see that 100% and then pulling back in this area now. So a very useful tool. Very useful tool indeed, and then you can use it by going down into smaller time frames to fine tune the entry points as well, which we'll look at in future editions of the market alert. 1:30 on Friday, the usual slam, market finding support, very quiet, as we head into the Christmas week or pre-Christmas week. And in gold, not doing a lot. It's a lot stronger, but you can see there we've had some volume coming back, losing a bit of momentum there. You can even get 89% retracements in the stochastics as well. So here you've got 100% retracement, but you can see that we're not lost momentum here. So market pulls back. Now we're trying to find a bit of support. So from there to there, we're at 62. The golden ratio ties in with the averages, which is not uncommon. And then just slightly lower than that, we've got the 78, 89. And then in the 30-minute chart, you can see the decline all the way through there, accelerating through that bit on Friday. Absolute joke, but it is what it is. The low, and there we've got the close from the previous day, which is Thursday. Market trying to find a bit of support there and get back above the 20-bar moving average. So no surprise to see the gold silver ratio heading back up to that 90 again. We've got this high to take out here, which is there, as you can see, 88 level, 88.30. But at the moment, it's having a good go at it. Again, you can use the retracements, fib retracements, to have a look and see how much it's retraced as well. Because this is built into this website, I can't adjust it like the other. You should be able to have an option to get it to extend to the right, but it doesn't show you the option. So yeah, if we just have a look across anyway, we can see that it's around 87.74 for that retracement, fib retracement there. So from the high down to there, it's in that sort of area, isn't it? That's what we're looking at. So at the moment, just through the golden ratio for this one. Right, let's have a look at Friday's trades before we finish off. So in the pre-market, before the cash market opened, prices had rallied up strongly. So we're already destined to make a new all-time high. There's the high from Thursday. And then we see prices moving up, creating that new all-time high as prices then drifted sideways to lower. We had a quick short there down to the 50 EMA, and then prices making their way or attempting to get back up before we had another. The 50 EMA supported the market on the first time, even though it traded below it. It soon brought it back, and on this trade also you'll see the market do exactly the same and eventually stop the trade out. The market became very quiet through the mid-morning, dropping down towards the close ahead of the US markets, and then from 1:30ish you see the markets heading back up there, and then 200 MA now reacting to the market prices there. And then down we go with the cash market in the USA. And I wasn't at the desk on Friday. I was at my grandson's nativity play. Some things are just a bit more important than the market, so that's why you see the line still on the chart. And then prices continuing down to the DP, just through the DP, and then starting to make their way back up to the close before once again being hit to the downside, as you'll see there. And hitting the scalp before it goes down and has a look at the low at this level, Thursday's low, before then trading sideways and making its way back there through the evening. So let's have a look at what the market's doing overnight. And overnight, you can see we've got Friday's low. We're below the BRN. The averages are all on the downside at the moment. We're also below the DP and the close. So a bit of weakness around there at the moment for the German DAX. That doesn't mean to say that it's going to trade down to the low or below the low. But at the moment, we've got a bit of weakness there. But looks like it's trying to make its way back to the upside. But it has broken off that 50 EMA there, and it's done that twice with this one and this one. So we'll see what happens. If the market goes down to the low, watch for support down at that level. Okay, that's it for this one. Have a great day. Watch those flash numbers when they're released. They can create a bit of volatility. The market's waiting for the the Fed's announcement on Wednesday as well. So it could be choppy and also quiet, given that backdrop of information as well. So with that, have a great day, and as ever, thanks for watching. See you in the next one.